There has to be a threshold, a demarcation point, a point of no return where you decide, okay, this has changed directions. Whatever direction you're going, if you feel bullish about the market or you feel bearish about the market, you have to have certain key things take place where you decide, okay, I'm no longer going to go bullish on this. I'm going to go bearish on this. With the market structure shift, that's what the ICT, I think we got that here. But it also correlates with my moving average strategy, which means I picked a certain time chart and I'm watching the moving averages on that time chart. And once they get in a certain position, then I'm no longer going to go bullish. So what we have here on a 10,000 tick chart or the 15-minute chart, when price goes all the way below the 20, the 50, and it starts to go below the 200, then I change directions, or I at least stop trying to buy and go long. I wait. Either I wait, or if price agrees on all time charts, I start to go short and I pick my short trade entries. But right now, I am not going. Right now, I wanted to make this video because it's toying around in that area. It's toying around with me that it wants to go below the 200. It's dipping below but coming back up. But you can see that it is trending down. So I think this is a learning lesson for me at this moment. This has to happen. If this doesn't happen, we're not going to be, growing. We have to get to the point in our trading system and strategy that we're tested at the most difficult times and difficult ways in the most difficult markets to see how we're going to react and how we're going to resolve those conflicts and those experiences. So right now, that's what I'm going through with this strategy. Let's take a look at the 15-minute chart here and look at the fair value gaps and look at market structure shift and see what's going on here. There are good reasons with ICT why we should change also. But technically, in this 15-minute, if you wanted to call this a market structure shift here, then it just continued to go up higher. This has not broken this, okay? And on the 15-minute chart, though, what we have is price has closed below the 200 moving average. So on the 15-minute chart, technically, I should be out of my, this is the last trade, actually. If this does not work, if it goes and stops me out, I have to wait for price to get back up over the top of these moving averages because there's no fair value gap here to use. There's no IC, there's a double top and maybe a breaker block high up there. It's possible that that is the high for a little while. But the question is, will it keep going down? And a lot of people would say this is a market structure shift, but it doesn't have a fair value gap on it. This is a 15-minute chart. There may be some on the 5-minute chart that look more reasonable. And there is one right there. In fact, right here's a fair value gap. And looks like it's respecting it, to be honest with you. So that's a lot. On 15-minute charts closing below the 200 moving average. Okay, right? And it's creating a bearish fair value gap right here on the 5-minute chart. So I pretty much could make my decision right here that I'm usually using the 10,000 tick chart. And price is trying to get below, I like to use the 10,000 tick chart, is trying to get below the 200 moving average. I mean, it is really, really, it whipped me out a couple of times already. And just in this market in general, maybe as I get more mature, I just won't even take trades when it looks like this. Because it's been smooth all day long. And now suddenly with this big red candle, I guess you could say since this big red candle and the second big red candle, after seeing this, I should have known, hey, the market's changed a little bit. This is not the same market. Okay, this is a choppy, hard to figure out market. But I guess I'm still holding out for this last trade because it's going to have to go down pretty far here to stop me out. And if it does, that'll be my last trade on this. But these are the things I'm looking for. And we all have to have certain keys, development signs, if you will, of that our trade direction has changed. The bias has changed, right? So with ICT, it's usually a market structure shift, breaker block situation, a change of order flow, right, after a liquidity sweep. And that's good. I like to use that actually, and I am going to keep that in mind when I'm thinking about should I be taking this trade to the long side. I mean, but this change right here, this is a breaker right here, and this is a 5 minute. I guess here's another fair value gap right there to the downside that was respected, and then these little ones look like they're being respected. So there's definitely no problem with thinking that this could go lower. This could go lower, right? So I guess the one thing I'm holding out for is that old 10,000 tick chart here. It looks like I'm just going to make it come and stop me out at the bottom here, and then I'll be done. Because my goal right now is to hold my trades. I'm tired of getting out of trades. If I could hold my trades, I've had some great runners and winners. And I'm going to be doing so much better when I just hold my trade and let it work itself out. So I'm kind of making myself do that here. Even if it loses, I have to get into the mindset of holding the trade. I have to get in the mindset of holding the trade. I don't want to get out of the trade too early. So that's kind of what I'm experimenting with, my psychology here, that I need to be able to hold trades. So let's see how this works. Hopefully it will go in my favor, but at the same time, I'll be growing in psychological benefit if I can just hold the trade and not get out too early. Okay, this is see how it's finally falling down below the 200 moving average. Well, it's been down there before. It spiked down there several times and came up. The thing about it is making lower highs here. I anticipate it to continue down. So why don't I get out of it now, especially seeing that the 15-minute chart had already showed me that it had closed below the 200 moving average. And so therefore I should already be out of this trade in terms of trying to go long. So I'm going to make it stop me out for the pure purpose of me holding this trade until it plays out. It's something I have to do. Once I get that down, I'll be profitable. I'm almost positive. Even if I lose on this one, it's fine. I have had so many trades that went in my favor and big wins, but I got out of it too early. And so let's let this play out. Okay, but I do want to focus on the fact that the 15-minute chart was telling me to get out, or at least don't get back in a trade. Right over here, when it started to break down, well, right here, it had closed below the 200 once, came back up, closed below it again. One candle below it is not something that I'm concerned about. Well, here's two candles right off the bat. Right here, the very first red candle and the green candle both closed below the 200. But then when it shot right back up, you're thinking, okay, that was just a little test. It has really been doing a number. Now this one, big red candle here that closed below, and the hammer, well, again, as it goes straight back up over the top, you're thinking, okay, it's just whipping everybody out here. But the whole picture with the moving averages coming down, the fair value gaps that have been reached, that have been supported, the bearish, the reason why I really beyond the moving averages is the fair value gap situation that I'm seeing here on the 15-minute chart. That's not a joke. So, like I said, if it stops me out, I'm done. But what I'm trying to do is just kind of meditate my way through this as I'm learning how to balance everything that I'm seeing on all the multiple time charts and all the different signs and clues on what to pay attention to. All right, trend lines, moving averages, support resistance, order blocks, fair value gaps. The whole thing is telling me, giving me a message. And the message is get out of it. Once this stops me out, if it does, don't get long on this right here. In fact, there'll be a time if this continues in this direction, especially if the 20 and 50 cross under the 20. Once that crosses under in the 15-minute chart, once everything goes that direction, that far, that strong, then I'll be looking for actually short trades, trend line breaks and short trades. So here we have a close on the 10,000 tick chart, a close below the 10,000, the 200 moving average, And if it closes below and continues, that was my original goal. All right, so I won't be getting long on this. Stop is right here. It's obviously going to get it pretty clear that that wants to grab that. And lower highs all the way down. So I'm going to go ahead and let this stop me out, but I'm going to hold this until it does, because I'm not going to get out. I think that's just what, I'm being tested in. Am I gonna get out early, or am I not going to get out early? And it's going to do everything in its power to test me, and that makes me a stronger trader. So even if I lose, I've got to hold it until the end. All right, I'm just needing to say that over and over to myself. Hold it until the end of the trade. Let the trade work itself out. I have been waiting and waiting and waiting, and it's chopping around. The market is closed. I'm still in the trade. I'm going to hold it as long as it doesn't stop me out. We'll see what the overnight session does here. Hopefully it won't gap down, but my target's right up here. I'm still holding this, and this is quite a lesson to learn. I hope that it goes and wins, because I'm dedicated to letting it stop me out. I'm dedicated, and that's how I got to enter into these trades. I am dedicated to this trade. It's like a marriage. Once I pull the trigger, it's like putting the ring on the finger. It's till death do us part trade. And if it stops me out, then that's the death part. And hopefully it'll go hit the target. But once I enter the trade, it's like a marriage. I have to see it through, and do not move the stop loss. Do not get out early. I can break even if it gets way into profitability, but that's about it. I want to let the trade work out. Okay, bell is closed. Market is into sleep mode here. It comes back on here in another hour. I'm still holding the position, so we'll see what happens after the new day begins, and I might have to hold it all night to get my result. It's either going to stop me out, or it's going to go to my target. Just to conclude the video on what really happened, it did eventually stop me out, and what I did was I got back in and got stopped out again, and this is where I had to say, okay, I'm done. But then in the end of the big picture, if I would have gotten back in, it would have stopped me out again, and then went right up. And this is the morning. We woke up this morning, and this is where it's at. So this is how trading can be. But the point of the whole video is, when I'm in a trade, let it work itself out. You don't know which ones are going to run on and go in the right direction. So this does not matter. This is what keeps people from holding their trades. I'm not going to do that anymore. In fact, I got a new system now where I'm going to keep a record of my winners and losers, and I'm going to record the A+ setups, and I'm going to let the losers be the losers and the winners be the runners, and I'm not going to touch them when I enter the trade. I'm going to let them work themselves out, and that's going to be my new way of trading. I'll see how that goes. Hopefully it'll be a good thing.